No, I don't think there's anything significant in the Fed minutes. The focus now really is on Janet Yellen, the new Treasury Secretary, and her potential cooperation and knowledge about how the Fed works and how that could help with the recovery and growth into 2021.
I wanted to get some insights on your equity strategy right now as well. We've seen November being a very strong month for stocks. And as we see this pullback just perhaps starting to take place now, you say it's an opportunity to add to risk assets. That's despite the otherwise weak economic fundamentals and rising virus case counts, which continue to put several jurisdictions back into lockdown. What's the view here moving forward?
The view looking forward is that investors are looking through the valley with regard to growth that is being created by the second, third, fourth wave of coronavirus infections. Economic numbers in the fourth quarter are going to be abysmal. But as is always the case, investors are looking ahead. The market is a discounting mechanism. And as we look ahead, we see the rollout of the vaccine starting as soon as the second half of December. And thereafter, we'll see more mass vaccinations into the first quarter of next year. And that is likely to revive some of the key parts of the economy that have been effectively shut down, particularly in the hotel, the airline, and indeed the restaurant business.
Clive, good afternoon. Thank you for joining in this conversation. So when does one make that switch from growth to value?
It's a great question. And what we're focusing closely on is bond deals, specifically 10-year US bond deals, because that's been really the factor that's driven the value recovery that we've seen over the past month or so. We certainly see the potential for US bond yields to rise further. They could even breach 1% from their current level of approximately 88 basis points. They could breach 1% early next year, and that will further help extend the value rally. However, we still remain focused more on the quality end of the market. We're not fully committed to increasing our allocation towards value stocks. And that's because, while bond yields can increase in the short term, there is a massive output gap in the US economy. The structural constraints on growth in terms of productivity and demographics, there's no getting away from them, even when we get the mass rollout of the vaccine. And they're going to act as a cap in bond deals in our mind. So eventually the value recovery will run out of runway, in our view.